Welcome everyone. Thank you for joining us today for our webinar, Moving from Survival Tactics to Strategic Initiatives. I'm Mariel Fong, Director of Marketing at Engage3. Today's webinar is for the pricing and merchandising folks like you, those who want to assess the shifts in your company's competitive position. And you want to know what the underlying causes are for these shifts that are happening during this very unusual time. And you're in charge of figuring out where your competition is investing and taking costs. You would also be concerned about whether your competitors are doing their investments regionally or nationally. So if these are your day in and day out challenges, you are in the right place. And at the end of our 45 minutes, we hope that we would have shared some insights as well as the latest tools that would make your life just a little bit easier. So I wanted to highlight an offer that we made for today's attendees, and that's a free limited license for our Mission Scanner tool. Mission Scanner is a mobile app that's being used right now by some of the largest grocers in the US. What it does is it lets you send team members to specific competitor stores for ad hoc pricing collection, and you could do it discreetly and efficiently with your own mobile phone. So we'll talk about this some more later at the end of the webinar, and if you're interested in taking advantage of this offer, you can fill out the application form that will be available to you. And then finally, I want to point you to a couple of blogs. The first item that I want to point you to is a recorded interview by Bill Bishop, Chief Architect at Brick Meets Click, of two pricing experts, Engage3's founder and Chief Innovation Officer Kenwy May, and Morgan Siebert, who is the Nielsen US Analytics Managing Director. In this very interesting discussion, they interpret COVID's impact so far, and they talked about what grocers can expect in the coming year. And that's specifically in terms of expanding inflation in grocery prices, and a very surprising development, that's of shrinking brand support for promotional spending. And they also talk about the need to improve online sales profitability, because it's a well-known fact that retailers have yet to figure out how to make online as profitable as brick and mortar. Also, they finally share their thoughts on growing pressure on improving retailer price perception. But what was personally striking to me in this discussion is that there's an eye-popping $13 billion worth of inventory in customers' pantry, and that's according to Nielsen's Morgan Siebert. So when you watch this video, this is just one of the numbers that are presented for your consideration. Okay, so the second item I wanted to share is a new capability that we've been working on with Nielsen. So together, we at Engage3 and Nielsen have developed what we call Price Image. It's a capability to understand how consumers perceive your pricing, or a retailer's pricing in the market today, how they perceive that pricing and how they will respond to changes. So the point there is to help you better understand what the drivers are that will impact that perception and build loyalty with your customers over time, because understanding your price image can be an enormous asset where customer satisfaction, and which is critical for long-term loyalty, represents that gap between their experience and their expectations. So for that second content, it's password protected, and you can access it with a password price image, and that's one word. So as you can see, I provided the QR codes for these two pieces of content, so you can get to them quickly. If you are interested in content like this delivered to your inbox automatically, you can email me at mfong@engage3.com and get added to our pricing newsletters distribution. With that, let me turn you over to David Esparza, who will be moderating for the rest of this session. David?
Thanks, Mariel. Hello, I'm David Esparza, and I'll be the moderator for the rest of this webinar. Today we have three speakers with us. We have Phil Tedesco, Director of Nielsen US Retail Analytics, Jonah Ellen, Engage3's VP of Product, and Kevin Johnson, Engage3's Senior Product Manager. Let's start with Phil. Phil Tedesco is a Director of Intelligent Analytics at Nielsen, where he partners with over 60 retailers to provide scaled pricing, promotional, and assortment insights to help them better manage their merchandising strategy based on localized competition through AI-enabled tools. During his 13 years at Nielsen, Phil has worked with some of the world's largest retailers and manufacturers, providing recommendations insights, and strategic frameworks for growth. Prior to Nielsen, Phil worked at Kraft Foods in their sales organization. Next, we have Jonah. Jonah Ellen has 23 years of experience in price optimization, product management, and analytics. For Engage3, Jonah was VP of Product at Rubicon Global, delivering SaaS products for smart cities and fleet management. He spent 7 years at dunnhumby in product development, and he spent 10 years at Information Resources Incorporated, IRA, working in different areas including measurements, science requirements, project management, and product management. And finally, we have Kevin Johnson. Kevin's work as Senior Product Manager has allowed the company, Engage3, to grow into his current offerings. His team is responsible for deploying Engage3's product suite, leading the development of missions, which you'll see today, and the competitive intelligence management platform. Before Engage3, Kevin led business development at Data Assembly, a competitive price collection company focused on retail and grocery. We have 45 minutes for this webinar, and we value your time and appreciate your attendance today. If you have any questions during the presentation, please type them into the question box in your webinar control panel. I'll bring your questions or comments up at the end of the presentation. So let's start with one of our 5 survey questions today. The first is, do you think retail prices will continue to rise through 2020 and into 2021? And display the results. Okay, so it looks like 100% of the people who responded are saying yes, so that's pretty indicative of the need for what we're going to be talking about today. So thank you for your replies, and I'll now turn it over to Phil Tedesco.
Hi, thank you for having me. Very excited for the opportunity to just share a little bit of what we are seeing in the marketplace with the retailers that we're working with. Really interesting to see there that the folks on this webinar are anticipating that the costs of products and inflation will just continue to rise throughout the year. That's certainly what we've seen so far in the marketplace with inflation. So if we could, start to look at some of those slides with our inflation data, I think we'll start to see an interesting trend, right? Kind of year ago comparison. What we see our shoppers are paying 4.5% more for the exact same products that they were purchasing last year at this time, and that's through July of 2020. So an interesting kind of way to look at this is we're using the top 5,000 selling items in the marketplace to identify like-for-like products. So really keeping that basket of goods consistent over time allows us to track the impact of increased costs and inflation. And so it's really being driven by a lack of promotion or less offers of promotion, which is prohibiting shoppers' ability to take advantage of discounts at the register. And so what we saw in this is that really escalated during peak stock up buying when supply chains were limited, when retailers were starting to implement limits on the amount of products, even on promotion that somebody could buy, maybe a limit of 2 or a limit of 5 per trip. And so what this really has meant is shoppers are paying more than they were pre-COVID. In recent weeks, it's softened and started to plateau slightly. And so we can start to break that down with some of the information you'll see on the slides from here forward. We've seen a little bit of a change by department. I'll show you that shortly. So on this first view, we go all the way back really to the beginning of 2018 to just allow for some context in the trend over time, right? And you can see here that inflation has peaked a few times since 2018, right? A little bit of a ramp up at the end of 18 into the beginning of 19. 2019 was relatively stable throughout the year, a little bit of ups and downs across the summer months, but at the beginning point of 2019 to 2020, relatively stable. And then you start to see all of the major events happening in the marketplace throughout the onset of COVID. Now we can actually zoom in and start to look at it only on 2020 on the next slide here. And when we start to do that, you can see a couple of things with your non-promoted or everyday price in that blue line, and the total price in that kind of purple line. And that allows us to capture the impact of promotion. And so what we started to see during that stock up period is that there was a separation of the two, really driven by the percentage of units that were being sold on promotion. You know, in a typical week in a grocery store across the total US, you can expect about 31% of units to be sold on promotion. That dipped rather dramatically in late March, early April, all the way down to about 20% of units being sold on promotion. That has started to come back, but ever so slightly. It's been a very slow build there in the amount of promotional activity that we've seen. Almost the very fast reaction in the short term and a very slow path back to promotions returning in the marketplace. And that's really what's causing this kind of total price inflation to go up. You can see non-promoted prices are relatively stable after that immediate run up in March and April, right? So we think that everyday prices have the opportunity probably to go up as trends change and then we go back to a different market here in the next few weeks with people returning to school. But the role of promotion will also be pretty important here. And so we start to look at this on the next slide by some of the drivers of the different departments, right? And so again, just looking at 2020 data, we're starting to look at the percentage of the units that are sold on promotion in some key departments in the grocery store, with that blue dotted line being your total store. So grocery in green, frozen in red, and household care in purple. We all saw take a very steep dive during the stock up timeframe, in March and April. Meat, to a lesser extent, a little bit more delayed, but meat has already started to come back with a significant amount of its units kind of being sold back on promotion and actually more than pre-pandemic levels. Where grocery promotions are still down 11 points since the beginning of COVID in early March. And so a couple of categories we see, like sandwich bread and fruit juice, are kind of driving a return there, but it's a little bit more episodic in nature rather than being very broad across the entire store, right? And so that means shoppers are really going to be looking for value, right? You start to combine this with the high level of unemployment, what's going on in the macro economy as stimulus checks are becoming more limited and less available in the amount and the frequency, combined with unemployment. It will be imperative that retailers offer a value proposition to their shoppers to be able to drive traffic, right? And so just kind of one more view on this on the next slide as we kind of close out thinking on the role of promotion. We also wanted to understand what's driving this. Is it less discount being offered to shoppers, or is it just sheer amount of availability? And we would say it's availability based upon the two metrics you see on this slide. The depth of discounts rather consistent over time, pre-COVID and post-COVID, right? There's not a lot of variation in that blue bar, but you can see the green line as far as the percentage of units that are actually being sold on promotion each week has dipped, right? And so it's not so much a change in the promotional discount that's offered to shoppers. It's really just about the availability of those promotions to offset some everyday pricing. So as we work with our retailers and our clients in the space, we're really focused on helping them communicate value, and some of the discussion that I think the other panelists will be sharing with you here shortly.
Okay, thank you for that, Phil. That was really insightful into the different trends we've been seeing in the last few weeks. Before we get into the next section with Jonah, I'd like to launch another quick survey question because it has to do with what he'll be talking about. And I'll give you about 30 seconds for this one. So according to this, most people rate their trust in price index at about a 3, which is right in the middle. We see some people with more answers in 4, a little more trusting. Okay, thank you. Jonah, if you would take us away into the next section.
Thanks, David. Appreciate that. I think that's kind of a telling slide in terms of the poll results. So I don't get to vote in that one, but I certainly echoes what I've heard around the industry and experienced over my years, including the years where I wasn't at Engage3, helping to produce those numbers. So I'm going to take you through a little bit of the day in the life. And I've spent a lot of time working with retailers, including shadowing people, some of which didn't necessarily appreciate it, but I certainly appreciated them sharing what they went through on a day in, day out basis. So I'm going to take some of that perspective and mirror it back into some of the things that we've built at Engage3 and how we envision them being used, especially in light of the current state of the economy and what's going on in the country. Go to the next slide, please. So a lot of companies do this on different days of the week, but we used to refer to it as the Monday meeting. And this was kind of indicative of the calendar that we might see on the pricing analyst day. Hit the next slide, please. We had a lot of interesting nicknames for these meetings. My favorite was Ownier Failure. This was kind of coined off of a company that was saying everyone needs to own their own number. And a lot of the number had to do with the sales number, but it was directly tied to the price index. And these meetings were really a brutal occasion. It was hard to get what you needed to go to the meeting. And then you got there and everyone immediately started ripping up the data. The everybody hates data one was really a wonderful one, especially because the gentleman who produced the reports that landed on everybody's desk Monday morning, his name was actually Raymond. So they couldn't say everybody hates Raymond, but inherently they didn't hate Raymond. They just hated that he was delivering this stack of data for them and trying to figure out what to do with it. Inevitably, though, they finally got to the meeting and they ended up in a state of analysis paralysis. What do I do when nobody trusts the number? And worse yet, what do you do when the answer that keeps coming back is, we can't afford that? I want to invest in this. I need money to do this. I need to drop this price. How do I compete with that retailer and the number that they're putting up? And it really became something that was very stressful, which led to the running gag that at lunch, everyone would decide who was going to be thrown under the bus first or who was going to call in sick. We go to the next slide, please. I always think of Garfield when it comes to hating Mondays. Certainly, many of you probably felt this way yesterday. Hopefully you didn't have to attend that particular meeting though. Next slide, please. When I think about owning the index, I think it is really critical that individuals who run categories, be it in the pricing analyst side or the category management side, that you own the index, that you understand it. First off, you've got to have a number you trust. And Kevin Johnson will be talking later about how do you gain that trust and how do you understand it so you don't end up in that awful meeting with analysis paralysis. Being able to explain the number, where it's coming from and how it's changing, knowing that number, and then more importantly, what do you intend to do about it? The rock star in that Monday meeting used to be the individual who came in and said, I've looked at my number and here's the 3 things I need to do about it. And not always was there agreement on what to do, but on the other hand, it was a much better dialogue and conversation. And that's what we're inspired to help you to do with our tools. Go to the next slide, please. So the first part's about knowing the number. And there's a lot of different ways of doing this. Kind of think about making each person their own executive. Look at your dashboard from the perspective of the critical intersection of the product set that you own, be it a department, be it a sub-department, category, subcategory, but really own that and understand your number in context of the competition. Where is it good? Where is it bad? understanding that number and then understanding how it's changed. Are you trending in the right direction? Are you not trending in the right direction? The next piece, though, is really critical. And this is where we're trying to make sure that your teams have the ability to do something, which is know what or know who is driving it. And what we're showing in this particular chart is a breakdown of win, draw, and lose. Where am I winning in the marketplace? Where am I even? And where am I losing? And how is that changing at time? And being able to see that at those critical intersections of product and competition is really something that we feel can enable you to make better decisions. Being able to click into any of those periods and see your price versus the competition really should help you to gain that visibility of what's going on behind the index. And then the next critical step is what to do about it. We kind of think of this as a few different stages. Some of it really depends on your strategy. Some of it depends on your staffing and your ability to react. And part of it also probably depends on how much focus you have at any of those critical intersections. Kind of look at it in terms of a walk, jog, and run approach. Walking, you're looking at your index gaps. How far am I from the competition with my win, draw, and lose? A jog, you might be providing additional information, such as your existing cost, and being able to look at it and say, where I'm losing, can I afford to do something different? Or do I need to have a bit of a different dialogue? Bringing my supplier into the equation, looking at new product development, and looking at things not just from a price perspective, but a holistic assortment perspective as well. The one that I'm really excited about, though, is incorporating price image. Index is a great number, but it doesn't incorporate consumer demand. It looks at it in terms of mathematically, where is my price versus the competition, but it doesn't bring in how does the customer respond to a different price, and how does the customer see my price today? Do they actually see a dollar as a dollar, or am I getting more credit based on their consumer buying behavior because I've achieved a great price image with them in terms of the trust and loyalty that they have both to my brand as well as the brands that are on my shelf? So all of these are valid methods. It really depends on how you want to invest your time and how much focus you want to put in the category. I'm a big fan of bringing in that consumer demand. My experience over the years is that that's been quite valuable, enabling better decisions, but also in terms of a higher ROI, both on your investments, but also determining where you can actually bring money back because you're potentially investing too much, or since you are getting significant credit, you're able to bring in your own margin there. Go to the next slide, please. A little bit more detail on this. The index gaps really looks at where am I above and where am I below. When we get into the affordability, we're adding in that cost information and looking at it in terms of a balanced portfolio. If you need to find money to invest in one product, how do you look at it from another product's perspective? And then where you're unable to make the investments that are necessary, what are some of the other options and opportunities? And then price image really brings in that customer demand, helps you with the efficiency of your investment analysis, and focuses in on the ROI. Where can I invest $1 and get back greater than $1 in terms of the credit with my customers for the investments that I'm making in price? Next slide, please. In terms of price image, we're bringing this information to the market in partnership with Nielsen. We're using a lot of the great data that they have and combining it with our data and then our customer demand modeling. The modeling that we're using takes advantage of some theories from quantum physics, as well as brings in a behavioral analysis that we're able to analyze with the data in order to help people really understand what's going on. We focus heavily on what we call the price image advantage. How is your price image compared to the index? So how customers respond versus what you're actually paying for in the market in terms of your price index. This really brings a lot to the table in terms of helping you to determine your strategies. And these can be brought to life either by enacting policies and processes yourself or through our price image management solution, which actually helps to optimize and provide a response back as to the best way to achieve based on the levels of sales, profitability, and the price image that you're trying to convey to your customers.
Okay, Jonah, I'm gonna stop you for a second to get a little bit of feedback from the audience. So we're gonna launch another poll, this time based on price image, and see how important that is for everyone. Okay, let me share these results with you. So it looks like most people either rank it on a 4 or 5, which is good since Jonah will be talking a little bit more about that right now. And so you can see the differences between price index and price image as he was talking about. So I'll pass it again to you, Jonah, so you can continue.
So if we go to the next slide, and actually let's go right past the title slide if we could, please, in the interest of time. So pricing directors are also participating in that meeting, as are sometimes more senior staff. It really depends on how you're organized. And one of the frequent responses that I've heard is, I love that my team's coming in prepared. And they really do, they love it. But on the other hand, you need to have a broader context. You can't just look at everything at an item level. If you think about every category, if every category manager shows up with 5 pricing changes, you're into a huge volume. And how do you look at that more holistically? How do you better understand? And how do you make this into a strategic conversation, incorporating where do we lead and where do we follow? And if you think about what Phil shared surrounding inflation, prices are definitely changing. But do you want to change your price going up and then find out that the competition didn't follow? Or do you potentially want to get caught in a race to the bottom, investing in the same products and getting tangled up in a competitive atmosphere? So there's a lot of challenges there, and you really need more information to go into this. Next slide, please. So one of the things that we provide is a price change summary. And this is really looking at, once again, that critical intersection of product, competition, and geography, and really assessing what's going on. Who's changing prices and where? Are they going up? Are they going down? And what am I going to do about it? This is the opportunity to look at it not just at that product level, but to look at it in terms of how do we want to respond to what's going on in the marketplace? How do we want to respond to that price change that just came through to us? If your costs are going up, are you going to push it on to the consumer? Are you going to lower your margin? And what's everyone else doing? Because these things often happen across the entire industry. Having that visibility, being able to see increases and decreases, as well as being able to see the trends, understanding it in terms of the categories, the departments, but also understanding it in terms of the brands. This better informs those senior people so that when someone comes through and says, I want to increase this price of this product, you can think of it in terms of not just how your customers are going to respond, but how's the rest of the industry currently responding to some of these pressures that you're feeling in terms of inflation. Next slide, please. Another aspect of this is really understanding who you're competing against. You could pick a competitor, you know who you compete against, but if they have 20 stores in a metropolitan area, are all 20 of those stores acting the same way? Do the stores that are 5 miles north of your location act the same way as the stores that are 6 miles east? Understanding zone structure is really important. being able to make decisions based on who you're really competing with for those customers' baskets is critical. We have a process that helps to understand your competitive zones. How is that particular retailer grouping their stores together and going to market? We look at it in terms of both their pricing, but also their assortment, and enable you through an interactive clustering map to create the zones based on those parameters. How similar is their pricing? How similar is their assortment? Creating ranges around that really helps you to make decisions about who you're really competing with, and also enables you to compare zones to zones as well as stores to stores. Next slide, please. Once you understand who you're really competing against, you can go from that aggregate view down to a very specific view. This view is really designed around being able to take a store from that zone that you're really concerned over, that you believe that zone is going to compete with a group of your stores, and be able to see at the store level, how are they changing? How are they changing category to category? How are they changing brand to brand? Where are they increasing? Where are they decreasing? And this can, once again, feed into that director level view of how do I evaluate the suggestions that are coming that people have assembled, whether they've used the index gap method, the affordability in gap, or whether they're bringing in price image as well. Understanding what the competition is doing, how they're going to market, and being able to kind of bring that strategic perspective can stop both overreactions as well as sweeping things under the carpet that you really need to be looking at that are denoting major trends that your competitor is following or taking advantage of, and making sure that you don't miss the boat on those as well.
Oh, Jonah, before that, I believe we got a question from the audience that would make sense to pose here. And this one's for both you and Phil. So the question is, of the different types of stores, I believe they mean the different kinds of industry like supermarkets and discounters and mass, who do you think will return to regular promotions first?
So I'll give my quick perspective, and then Phil can correct me based on the vast data knowledge that he's got as well. I'm really expecting that grocery will return to larger quantities of promotion first. You know, the big box, the EDLP and club stores, if you will, tend to be more everyday low price to begin with. They certainly run promotions, they certainly run specials, but I don't think the percentage volume that they're using in the space to drive their business is quite as large. So I think that that's an area. They also have very large infrastructure and apparatus around this in terms of the number of people that are dedicated to working with suppliers to plan promotions and negotiate around trade dollars. I think there's also been a lot of experience that customers have built up with expectations around promotions, and that returning to that particular way of life is something that many customers are expecting, even if retailers and manufacturers aren't necessarily as excited about returning to that. Phil, do you have any thoughts or anything you'd like to add to that?
Yeah,
Feel free to contradict me as well.
Yeah, I could add to that real briefly. I think what Jonah says makes a lot of sense as you think about the starting point of whose business is a little bit more dependent upon promotion, or whose business has more of it ingrained in their day-to-day strategy, and that seems to be grocery. You know, we see that the circular and its impact has eroded over time, right? And retailers who are keenly focused on identifying the most effective promotions, the ones that generate the most traffic for dollars spent, are the ones who are kind of becoming even more effective in their promotions. And so I just add that to illuminate, I think, that there's winners and losers in promotions today, and those who are understanding the drivers of the business and can make winning promotions work harder for them and stop running those that are not winning, creates even another stratification between those who are leveraging promotion and those who aren't.
Okay, thank you, Phil and Jonah. Kevin, if you will.
Yep, thank you. So earlier in the discussion, Jonah referenced the concept of owning the index. And I'm sure I'm probably preaching to the choir to some extent when I say that it really does start with an element of trust. The adage that we commonly go to when we talk about data is the classic garbage in, garbage out. We've all been in situations where we've had to make snap decisions that can get really messy due to a lack of trust. So when it comes to knowing your number and having a number you can trust, it's impossible to have and really be able to do those things without building a foundation that you can rely on. Next slide, please, David. People say that data is the new gold, but gold and data still have to be mined. And unfortunately, a mountain of unstructured data isn't valuable. So this is where linking your products to competitive products really becomes critical. Engage3 enables our customers to understand how your products are mapped to competitor products and consequently how your indexes and reporting are derived. So the first step is really understanding how much of your assortment is matched by count and by sales volume. So you could have a category with 100 items in it and only 20 of those items are linked, but those links could cover 80% of your sales. So really, in good shape there. And really understanding the interplay between both of those actually allows teams to focus on the highest value products to be linked. And of course, with assortments constantly changing, you really need a way to monitor and catch links that become outdated or stale as the distributions do change. So the ability to manage and trust a baseline of product links is no easy task, and having tools and automation at your disposal really opens up doors for pricing teams to focus on the more strategic initiatives. Next slide, please. So once links are established, the price collection becomes much simpler and price gaps become actually much more apparent. So, for online data, once links are created, the matching is automated and reflects downstream in reporting. In-store collection it really does heavily rely on those product links to allow auditors to collect accurate data at the shelf. We actually handle link creation in a few different ways. So to take a real world example here, on the left here, I can see collection requests as it's being set up in our competitive intelligence management platform. So we can see that there's 1,000 plus client products with links, 200 plus without. So what do we do now, right? A few different options here. We can package up and prioritize the products without links to be worked on in our product linking application. And that's either by Engage3 or by you. We can ask for a link to be created at the shelf through our mobile apps, or we can create links for them now if we have UPC or product URL information to propose. And then taking that a step further, we could also leverage Engage3's Web Clipper tool to go directly to the competitive websites and pull that data. Next slide, please. So in terms of time, there's lots of things that your team does that take up time. And we do often hear the phrase, I don't have time for another system or application. So one of the things that we've thought a lot about and really built our software suite around is the idea of saving you time on the things that take the most of it. For example, having to look up a competitive product and price in order to really drive to and understand the data that makes up that index. So we've developed a product lookup tool, which is something that we can use to select a competitive UPC or description and geographically view where that product is distributed and the pricing associated. Another example that we see all too often is pricing teams, are having to go out to stores, write down prices on scratch paper or in a phone memo, and then go back to the office and create a spreadsheet, email that spreadsheet, analyze it, etc. So we've developed some self-serve mobile applications that are really specifically designed to take the difficulties out of in-store collection, out of the process and let your experts go and make the decisions that matter. And then lastly, the data validation and exploration tool allows users to quickly automate some data cleanup actions. And we leverage quite a bit of statistical outlier flagging and machine learning in that application to make things really easy. Next slide, please. So one of our mobile applications, which Marielle alluded to earlier, the Mission Scanner app, was really designed specifically to allow users to very quickly capture assortment and price data. The application is largely used for free-form data collection. So, if you happen to notice a new competitor down the street or want to go investigate some new seasonal items, for example, Halloween, which is coming up and should be really interesting this year with everything going on, all that's really needed is to have the app walk into the store, identify a product grouping or category that you want to start scanning in, and then just start scanning from your smartphone camera. And a lot of the power really, in this app comes from its use of Engage3's product database, to allow users to be as efficient as possible when scanning. Next slide, please.
Okay. Next, Kevin, I'm going to pause you for a second to bring up the last survey question that we have. I'd like to ask everyone, how much visibility do you have into your competitors' localized pricing? And this will bring us into our last section. And I'll give everyone about 30 seconds for that one. So it looks like a pretty even spread. Most people answered 3, so right in the middle, but it seems that visibility is a pretty important factor in this case, seeing some 4s and 5s. Kevin, if you could, please.
Sure. Yep. Thanks, David. Do you want to jump to the next slide?
Yes.
Thank you. So for attending today's webinar, we're actually providing attendees with a free Mission Scanner limited trial. So in order to access that, you'll need to scan the QR code here and just fill out the ensuing form to get that process started. And then additionally, I know we're up on time. Additionally, our next webinar is actually going to be next month, where we'll be talking about bringing intelligence to intelligence gathering, including how we can partner and best practices in self-directed management with our software as a service products, as well as leveraging our comp shop optimization offering.
Okay, thank you, Kevin. And I'd like to thank all of our presenters today. Thank you, Kevin, Phil, and Jonah. We appreciate all our attendees being here. And again, to our grocers, thank you for all that you do. We know it's tough right now, and we appreciate you coming to our webinar today. If you would like to be added to the newsletter mailing list, you can email Marielle at mfong@engage3.com. Thank you again for joining us today, and we'll see you next time. Keep safe, stay healthy, and have a good rest of your day. Thank you.